Hey everyone, welcome back to our channel where we break down the latest financial news and trends for you. Today I'm diving into the latest buzz from Wall Street, and trust me, there's a lot to unpack. So hold on tight as I unpack the March jobs report and its potential impact on the stock market. This report is crucial because it gives us a snapshot of the economy's health and can influence market movements. First off, let's talk numbers. The US added 228,000 jobs in March, smashing expectations and signaling robust economic activity. This job growth spans various sectors, from manufacturing to services, indicating a broad-based recovery. You'd think this would be great news, right? Well, not so fast. The market's reaction was far from positive. Despite the impressive job gains, the S&P 500 dropped over 2%, raising eyebrows among investors. And the Nasdaq slipped into bear market territory, down 20% from its peak. So what's driving this downturn? Escalating trade tensions between the US and China are spooking investors, creating a cloud of uncertainty over the market. President Trump's sweeping tariffs on Chinese goods are stirring fears of an economic slowdown as businesses brace for higher costs. Investors are worried about higher inflation and sluggish growth, which could erode corporate profits and consumer spending. Even Federal Reserve Chair Jerome Powell acknowledged these risks, emphasizing the challenge of managing inflation without triggering a recession. Powell's comments have added to the market's anxiety as investors weigh the possibility of tighter monetary policy. Now let's zoom in on some sectors hit hard by these tensions. The impact is widespread, but some industries are feeling the pain more acutely. Airline stocks, for instance, took a nosedive. Delta Airlines dropped over 5% following an 11% plunge the previous day. Businesses and government are cutting back on air travel, and that's bad news for airlines, which rely heavily on corporate travel. The reduction in travel budgets is a direct response to the economic uncertainty and potential cost increases from tariffs. The tech industry isn't faring any better. Companies are grappling with supply chain disruptions and increased costs. For example, Nintendo delayed US pre-orders for its new Switch 2 console, citing tariff concerns and potential supply chain issues. The Nasdaq Composite, heavy with tech stocks, is now officially in bear market territory, reflecting the sector's struggles. Europe isn't escaping unscathed either. The EU is facing its own set of challenges amid these global trade tensions. The EU risks losing access to the US market while facing potential oversupply from redirected Chinese exports, which could flood European markets. They're preparing retaliatory tariffs and seeking negotiations, but the outcome is still up in the air, adding to the market's volatility. Now let's check out some stock updates. The market's reaction has been swift and severe, with many stocks taking a hit. The Dow Jones Industrial Average is down, along with the Nasdaq 100 and NVDA stocks, reflecting broader market concerns. It's a roller coaster ride right now, folks. The market's volatility is a reflection of the uncertainty and fear gripping investors. So what does all this mean for you? Are we heading for a market crash, or is this just a bump on the road to recovery? Analysts are divided, with some predicting a prolonged downturn while others see this as a temporary setback before a recovery. Drop your thoughts in the comments below. I'd love to hear what you think about the current market situation. Your insights and opinions are valuable, and they help create a vibrant community of informed investors. And don't forget to hit that like button and subscribe for more updates. Your support helps us bring you the latest financial news and analysis. Thanks for watching, and stay tuned for more insights from Wall Street. We'll keep you updated on all the latest developments.